Hi trader, I'm Max. Welcome to your channel, Max Take Profit. Do you want to understand how big players trap retail traders and how you can take advantage of it? Today, we're breaking down breaker blocks, explained simply step by step. In this video, we're going to cover what a breaker block really is, how to easily spot it on your chart, how to use it to plan a smart trade, and finally, the common mistakes you should avoid. These 4 points will help you read market movements much better. So make sure to watch until the end and subscribe to keep leveling up your smart money trading skills. Before we talk about breaker blocks, let's take 10 seconds to review what an order block is, because the two are connected. An order block is simply a market zone created when banks and big institutions place massive orders. Now that you understand what an order block is, let's see what happens when this zone gets broken, because that's exactly how a breaker block is formed. A breaker block is simply a former order block that price has broken through and then retested. In other words, the zone has changed its role. What used to be support becomes resistance, or the other way around. Now let's see how an order block actually forms. By looking closely at the chart, we can see that price broke the structure and created a new higher high. This movement confirms the reliability of our order block. But later, when the market comes back to our validated order block zone, we naturally expect the price to go up again. Instead, it doesn't rise, it actually breaks our previous low. By creating what we call a market structure shift, or MSS, then you can see that price comes back to retest that zone before continuing its move. And that retest area is exactly what we call the breaker block. Now that we understand how a breaker block forms using the diagrams, let's look at a real chart example to see how it actually plays out in the market. Here on the chart, we can see exactly the same steps we saw in the diagram. You can clearly spot the old order block, the break of structure, and then the price coming back to retest the zone which becomes our breaker block. Also notice how the price reacts on that retest before continuing its move. Now that we've seen how a breaker block looks on a real chart, let's take a moment to compare it with a regular order block, because understanding the difference between the two will make everything much clearer. By looking at both setups, we can easily conclude that a breaker block is simply an order block that failed, but later became a key zone for the opposite move. Now that we clearly understand what a breaker block is and how it forms, let's move on to the practical part, how to take a trade using a breaker block. The formation of a breaker block always begins with an order block that eventually fails in its original role and turns into a breaker block. Let's go step by step. Let's start by looking at the image of an order block being formed. Next, we can see that the market came back to retest our order block, but instead of moving upward, it broke the previous low, forming a MSS market structure shift. Once this happens, we wait for the price to return to our previous order block to give us an entry confirmation. And then the price came back to our breaker block one more time, confirming the validity of the zone before resuming its initial direction. Once you've identified this strong confirmation candle, the entry is straightforward. Enter at the candle's close. Place your stop loss just below the candle, or above, depending on the trade direction, and set your take profit at a minimum 2-to-1 ratio. Personally, I target a 3-to-1 ratio. I strongly advise against entering with a buy limit order, because your stop loss could easily get hit. In our example, you can notice a FVG, fair value gap, just above our breaker block, a zone that can attract the price before a real reversal happens. That's why I recommend waiting for the price to return to this area and give you a clear confirmation before taking your entry. In our example, we can clearly see how, after the retest, the price continued moving in the expected direction, all the way to reach our take profit. A perfect validation of our setup, showing just how powerful the breaker block concept can be when it's properly understood. Now that we've seen how the breaker block works in a real example, let's move on to something just as important: the common mistakes you should avoid to keep from falling into market traps. Mistakes to avoid when trading breaker blocks. 1. Confusing an order block with a breaker block. Many beginners can't tell the difference between a valid order block and one that failed and turned into a breaker block. Always make sure there's a market structure shift, MSS, before calling it a breaker block. 2. Entering too early without confirmation. Don't rush in on the first candle you see. Always wait for a clear confirmation signal, like an engulfing candle or a minor structure shift. 3. Using automatic buy limit or sell limit orders. The market can still grab liquidity before moving in your direction. Prefer a manual entry after confirmation. 4. Ignoring nearby FVGS or liquidity zones. These areas often attract the price, which can invalidate your setup. Always analyze what's around your breaker block. 5. Setting your stop loss too tight. A small wick can hit your stop before the real move begins. Leave some breathing room just beyond the last high or low. 6. Seeing breaker blocks everywhere. Not every failed OB is a true setup. Be selective. Look for a clear, logical market structure before taking action. As you've seen, the breaker block isn't just another trading concept. It's an intelligent way to read market behavior. By understanding how it forms, when to enter, and the mistakes to avoid, you gain a real edge over most traders. If this video helped you understand things better, drop a like, subscribe, and turn on the notification bell so you don't miss the next smart money lesson. And tell me in the comments, which ICT concept should I break down next? See you in the next one. And until then, stay patient, stay disciplined, and trade smart.